You sit down at your charts. You find a clean setup. The market is trending. You spot a perfect pullback, and you enter your position. But when you open your order window, you do something very specific. You leave the stop-loss box completely empty. You look at the chart, you draw a red horizontal line below your entry, and you make a promise to yourself. You say, if the price crosses this line, I will manually click the close button. I am going to use a mental stop. You tell yourself you are doing this because you are smart. You are tired of the algorithms. You're tired of getting wicked out. When the market drops just low enough to hit your hard stop loss, takes your money, and then immediately reverses and goes straight to your target. You think a mental stop gives you flexibility. You think it protects you from the market makers. But a mental stop does not protect you. A mental stop is the biggest, most destructive lie you can ever tell yourself as a day trader. And it is the exact reason your account keeps going to zero. Let me walk you through exactly what happens when you use a mental stop. You are in the trade. For the first few minutes, it hovers around your entry point. Then, the market starts to drop. The red candles start printing. The price gets closer and closer to your red mental stop line. If you had a hard stop in the system, the computer would simply execute the order. You would take a small, predefined loss, and it would be over. But you have a mental stop. So, you're sitting there, gripping the mouse, watching the price touch your line. And right at that exact microsecond, the negotiation begins. The price crosses the line. You are supposed to click close. But you hesitate. You tell yourself, it's just a wick. It's a fake out. I need to wait for the 5-minute candle to close to confirm the breakdown. If I close it now, it's going to bounce without me. You are breaking your own rule in real time. But you disguise it as being patient. The 5-minute candle closes. And it closes completely below your line. It is a solid, aggressive red candle. The setup is dead. The trade is invalid. You know you need to exit. But the red number on your profit and loss screen is now bigger than you originally planned. It stings. And your brain does not want to accept that sting. So, you go to the time frame drop-down. You switch from the 5-minute chart to the 15-minute chart. You start scanning the screen, desperately looking for a reason to stay in the trade. You zoom out. You find an old trend line from yesterday. You find a moving average that is 50 points lower. You draw a new line. You say, okay, that was just minor support. This is the real support level. If it breaks this new line, I will definitely get out. You are no longer trading based on an edge. You are hallucinating. You are bending reality to fit your desperate need to not lose money. The market drops again. It smashes right through your second line. The floating loss on your screen is now massive. It has crossed the threshold from a normal business expense into a painful, week-ruining disaster. And this is exactly where the biological freeze happens. When human beings face severe emotional pain, our brains have a deep, ancient defense mechanism. Fight, flight, or freeze. You can't fight the algorithm. You can't run away from the desk. So you freeze. You stare at the screen, completely paralyzed. You know that clicking the close button will make the loss permanent. As long as the trade is open, there's a tiny, irrational sliver of hope that a sudden news event will save you. But the second you click the mouse, the money is gone forever. You physically cannot bring yourself to click the button. Your brain refuses to actively inflict that level of pain on itself. So, you just sit there. You turn into a passive passenger on a sinking ship. You stop looking at the chart. You just stare at the red floating numbers, sweating, feeling sick to your stomach, watching your account bleed out. Eventually, the decision is made for you. Either the pain becomes so horrific that you completely break down and market sell the absolute bottom, or your broker issues a margin call and liquidates your account by force. The trade is over. You look at the damage. A trade that was supposed to risk $50 just cost you $800. And it all started because you thought you were smart enough to use a mental stop. You have to understand why this happens. It is not because you are a weak person. It is because human psychology is fundamentally incompatible with taking financial losses. We are wired to hold on to hope. We are wired to avoid immediate pain. When you use a mental stop, you are asking your brain to do the hardest thing in the world. You are asking it to voluntarily execute itself while under extreme stress. You're expecting yourself to be completely cold, logical, and disciplined at the exact moment you are experiencing fear and panic. It is biologically impossible for most people. A hard stop loss is not just an order in the market. A hard stop loss is an insurance policy against your own emotions. When you place a hard stop in the system, at the exact moment you enter the trade, you are making a logical decision while your brain is still calm. You are defining your risk before the chaos begins. Once that order is in the broker's server, the responsibility is gone. The computer does not feel hope. The computer does not feel fear. The computer does not negotiate, and it does not check the 15-minute chart to look for a magical moving average. When the price hits the line, the computer executes. It cuts your arm off to save your life. Yes, you will get wicked out sometimes. There will be days where the market drops, triggers your hard stop by one single tick, and then rockets to the moon. You will watch it happen, and you will scream at your monitor. You will feel incredibly frustrated, but you have to accept that getting wicked out is simply a tax you pay to survive in this business. Getting wicked out is annoying, but it will not blow your account. A mental stop will. You can survive 1,000 tiny, frustrating stop-outs. You cannot survive one massive, paralyzing freeze where you hold a losing trade down to zero. Professional traders do not trust themselves. Let that sink in. The best traders in the world, the ones making millions of dollars, know that their human brains are flawed. They know that if they are allowed to negotiate with a losing position, they will eventually make a catastrophic mistake. So, they remove the choice. They automate the exit. They put the hard stop in the system, and they do not touch it. They bind their own hands, so they cannot ruin their own accounts. If you are still trading without a hard stop in the system, you are not trading. You are playing Russian roulette. You might survive 3 times. You might survive 10 times. But eventually, there will be a day where the market drops, you freeze, and your entire account gets wiped out in a single afternoon. Stop trying to outsmart the algorithms. Stop trying to avoid the paper cuts. The next time you place a trade, put the hard stop in the market immediately. Accept the risk up front. Decide exactly how much you are willing to lose before you ever click the buy button, and let the system do its job. Protect yourself from yourself. If you know exactly what that freeze feels like, if you have ever watched an account burn to the ground because you couldn't bring yourself to click the close button, hit the subscribe button. We are stripping away the ego and building the mechanical discipline it actually takes to survive in this industry. Put your stop loss in the system. I'll see you in the next one.